China's debt has risen dramatically in the past decade, primarily due to credit fed to state-owned enterprises in the wake of the global financial crisis. The entire banking system of China is about to go bankrupt. How did China find itself in this unfavorable situation? In recent weeks, China's economy has tumbled due to recent signals that have revealed that the Chinese economy may already be in a recession. To some, the debt mountain threatens China's stability and even the world's economic health. However, others believe such fears are overdone as the majority of the country's debt is state-owned. Although we may be talking about China's debt crisis, the problem will affect other countries. China has managed to back itself into a position where it cannot escape without suffering more than a few bruises to its GDP. What will be the outcome if things keep going like this? Well, the Chinese Communist Party has attempted to curb the disaster, but the fact remains that the truth has already come out. That's why we're here. In this video, we're discussing China's debt crisis and how this crisis will affect other countries. So watch this video to the end and get ready to be inspired. Over the last few decades, China has gained a lot from forging its own path in financial development. The country resisted the neoliberal prescriptions of international institutions and the United States, and they avoided the premature fiscal liberalization that led to the Asian financial crisis in the late 1990s. Policymakers of Beijing also maintained a high degree of financial repression, allowing them to channel the country's savings into sectors that favored them, contributing strictly to China's export-oriented industrialization strategy. However, China's financial system is now showing signs of fragility and stress. The country is presently grappling with a double debt crisis that threatens to set back its efforts to become a high-income economy by the end of the decade. Now, the first debt crisis experienced by China is a domestic one, which was a slowdown in the proper sector that started about 12 months ago as a direct consequence of the 3 red lines, which served as a means to curb property speculation and reduce the indebtedness of property developers. The policy led to a sharp contraction and a domestic credit crunch in the property sector, which accounts for more than a quarter of China's GDP by some estimates. This slowdown has now become a mortgage crisis as mortgage boycotts spread to over 300 projects in nearly 100 Chinese cities. It isn't clear whether this mortgage crisis would imperil the health of China's banks and undermine their ability to lend in an economy that has slowed dramatically under the strain of zero COVID. It was so bad that Chinese citizens across the country took to social media to push for a movement to stop paying mortgages on their homes, to put pressure on the CPP and banks to treat them fairly. This kind of protest has never been done before. Some would-be homeowners' protests broke out in multiple cities, and the crusade seems to be gaining more and more momentum each day. The CCP looks worried that it has already sent out tanks to maintain stability. The standoff between developers and home buyers represents a crisis in confidence. Even though the current threat to Chinese banks is contained, the mortgage strike is weakening the strongest pillar in the Chinese economy, and it is hitting a sector that accounts for 29% of China's economy. Another major crisis is overseas debt caused by too much lending to projects that the pandemic is exposed to be less than commercially viable. You can remember that Sri Lanka defaulted on its debt for the first time in its history. This happened around May this year and became an unpromising sign of the problems likely to plague China's main overseas lending program. China's double debt parallels the European sovereign debt crisis and the U.S. subprime mortgage crisis over a decade ago. This debt also highlights the hazards of hubris and the delusion that China is exceptional in its ability to avoid financial crises. Talking about the country's rail project, we know that China used to be a large trade partner, but as things went on, the global market and the trading projects took a rough turn for China. These issues left millions working in exports and imports and several other industries unemployed. Instead of finding a way to distribute government stimulus packages, the government of China decided to launch a massive infrastructure project, which is the high-speed train project. This infrastructure project served as the Chinese Communist Party's efficient debt-fueled response to the global financial crisis. China first embarked on a high-speed rail project in 2008, completing the first in 2009. By then, the company's first long-distance high-speed rail service covered the 968 kilometers between Wuhan and Guangzhou, having an average speed of 350 kilometers per hour. Another strategy of the CCP is lending money to themselves. China's banks are using this strategy to boost loan activity for free. CCP has now been forced to manipulate data simply because no one is willing to take out loans. The People's Bank of China recently caught 4 key policy interest rates to boost the economy. In addition, the PBOC also cut its one-year loan prime rate for the second time in 2022. Chinese authorities also plan to give property developers special loans worth $29.2 billion. This is on top of China's existing $145 billion property fund. While double-digit slowdowns are substantial, that isn't that significant of a decrease. In the 2008 recession, U.S. home sales slowed down by 50% annually. The reason why China's economic data isn't that terrifying is that the data is manipulated. Recent leaks have shown that the CCP is manipulating Chinese economic data. Behind the fabricated numbers, the entire Chinese banking system is falling apart. All these things will affect several countries, and if care is not taken, these countries may go bankrupt. Since 2009, China has had a debt-to-GDP ratio of over 260%. Having an estimated 70% of citizens' financial assets tied up in housing. In this growth model, land sales serve as a major source of local government financing, generating about 1/3 of local government revenues. China has also suffered the overseas debt crisis. What does this mean? When realizing that real estate investments and the domestic demand for infrastructure would taper off as China's population peaks and at the rate of urbanization would slow down, China launched the Belt and Road Initiative in 2013. The country expected it to create overseas markets to absorb China's excess capital investments and its savings glut. The BRI project made China the world's largest bilateral lender. The value of BRI projects and transactions has reached $838 billion. However, the project risks developing a series of debt crises in various emerging markets for the country. Chinese institutions had to renegotiate the value of loans, and these loans surged to $52 billion. The issue at hand is now that banks have about $9.2 trillion of exposure to the property sector, and over half of it is in the form of mortgage loans. We should understand that banks that are highly exposed to these BRI loans are also in trouble. The reason is that the recipient countries with poor credit ratings will be unable to service their debt. If big Chinese banks face rising non-performing loans abroad, it is obvious that they will not be able to rescue insolvent smaller banks at home. And that is where the problem lies. All these financial crises will bankrupt different countries because China is a big country that houses a lot of production in many countries. We understand that a faster-growing economy always makes it easier to conceal the debt burden. However, as the Chinese economy slows, it will become harder to contain the fallout of its double debt crisis. That's why China government is extremely fearful about how this might turn out. If these issues keep happening, it won't be good for them and even for other countries. But we believe they will try all their possible best to curb any further disaster. Well, that's it for today, guys. If you enjoyed the video, do well to subscribe to this channel and give the video a like. Thanks so much for watching, and we'll see you in the next video.